Cash accumulation value refers to the amount of money that builds up over time in an insurance policy, specifically in an indexed universal life, IUL, policy. It represents the cash value available to the policyholder, which can be accessed through policy loans or withdrawals. The cash accumulation value grows based on the performance of the underlying indexed accounts, which are tied to a stock market index such as the S&P 500. As the index performs well, the cash accumulation value increases, providing potential growth and financial flexibility for the policyholder. Understanding the cash accumulation value is crucial for maximizing the benefits of an IUL policy. Cash surrender value is the amount of money a policyholder receives if they decide to surrender or terminate their insurance policy before the maturity date. It represents the cash value accumulated in the policy minus any applicable surrender charges or fees. The cash surrender value is typically lower than the cash accumulation value, as surrender charges are deducted to compensate for the insurer's expenses and potential loss of future premiums. It's important to note that surrendering an insurance policy may have tax implications. Depending on the policy and the length of time it has been in force, surrendering the policy may result in taxable income. Consulting with a financial professional or tax advisor is advisable before making any decisions regarding cash surrender value. There are several strategies that policyholders can employ to maximize the cash accumulation value in an indexed universal life, IUL, policy. First, regularly funding the policy with premium payments ensures a steady growth of the cash value over time. It's important to maintain consistency in premium payments to take full advantage of the policy's benefits. Another strategy is to allocate the cash value into the indexed accounts that offer the highest potential for growth. Policyholders can choose from various index options, each with its own level of risk and potential return. By carefully selecting the index accounts, policyholders can optimize the cash accumulation value. Additionally, taking advantage of policy riders or features can enhance the cash accumulation value. Consulting with a financial advisor who specializes in life insurance can also help policyholders develop personalized strategies to maximize cash accumulation value. Several factors can impact the cash surrender value of an insurance policy. First, the length of time the policy has been in force plays a significant role. Generally, the longer the policy has been active, the higher the cash surrender value as more premiums have been paid and the policy has had time to accumulate cash value. Another factor is the surrender charges imposed by the insurance company. These charges are deducted from the cash value when the policy is surrendered. It's important to review the policy terms and conditions to understand the surrender charges and how they impact the cash surrender value. The performance of the underlying investments or indexed accounts also affects the cash surrender value. If the investments perform poorly, the cash surrender value may be lower than expected. On the other hand, strong investment performance can lead to a higher cash surrender value. Lastly, any outstanding loans or unpaid premiums can reduce the cash surrender value. While both cash accumulation value and cash surrender value are related to the cash value of an insurance policy, they serve different purposes. Cash accumulation value represents the growth and potential access to funds within the policy, providing financial flexibility to the policyholder. On the other hand, cash surrender value is relevant when a policyholder decides to surrender or terminate the policy before its maturity date. It represents the amount of money the policyholder will receive, taking into account any applicable surrender charges or fees. It's important to understand the differences between these values and their implications when making decisions regarding an insurance policy. Policyholders should consider their long-term financial goals, liquidity needs, and tax implications before deciding to access the cash accumulation value or surrender the policy for its cash surrender value.